being here, and it is time to get started. And I'm grateful that you made the effort to be here on time. We really appreciate that. We do have traders attending from all around the world today, so wherever you are, I hope your weekend is a good one, and stay away from those virus problems. These are still very tough times for a lot of people, and I just hope that you and your family are well and safe and able to stay that way. This is Craig at Max Trading. Chris and Eusebio are here with me. Some of you know and love them both, and others are meeting them for the first time today. So you're in for a very special treat, and we're so glad to include you in the Max community today. There will be others who will join us later by video, and thanks for taking the time with our video as well. You know, this business of dealing with COVID has been so very long and such a drawn-out process, but one of the nice things about trading is that you can do it just about anywhere that you have an internet connection, and you can do it safely, and especially you can do it within your own home. So this is a really good time to learn a very profitable trend following system, and we love having the opportunity to show it to you today. We're very proud of it. And on top of that, Eusebio is teaching us in today's webinar 3 really important trading tips. If you are already aware of them, then this will be a good review for you. And if not, it will be especially helpful, and indeed helpful for all of us. It's just good to get updated now and then. We continue to be very pleased with the ongoing performance of the Max trading system. Believe it or not, it is now more than 14 years that this system has been traded live, and so we are not guessing and we are not hoping when we say that this is a game changer for traders of all skill levels. You might be a true newbie, or you might be a proven veteran, and either way, everybody appreciates the confidence and the success that comes with learning and using this system. More than 2,000 traders, in fact, are graduates of a Max trading course. That, folks, is a lot of training, and we've learned how to teach it extremely well. I promise you, you will get the help that you need. In fact, I can't even remember the last time I had a complaint about our training. Everybody appreciates it. So this is a place where you can learn a very profitable, very flexible system. It is excellent for any market that you prefer: Forex, futures, options, anything that you like, as long as it has some movement or some trending, and in any time frame. It's very flexible. What you learn from the 5-minute time frame, you can apply to any other time frame. So if you like that rush of adrenaline that often comes from trading the fast charts, let's say from 1 minute, perhaps up to 5 minutes, you will love Max Trading. It may be that you're like me. You're more comfortable and you perform better on a slower chart, say 15 or 30 minutes or more. Max is for you. And then if you just don't have much time for trading and you really don't like sitting around in front of your charts for hours at a time, you will truly appreciate the ability of Max to perform on the 4-hour, 8-hour daily charts. And this system will be very much for you as well. Very flexible, very powerful, and with a profitable system like Max, you also get a great trading community. Many of you will be taking a Max course with us in just a couple of weeks now, and along with that, you'll get a lifetime Max membership. And so we truly look forward to being around, trading with you for many years yet to come. And our little community here also provides a wealth of ongoing support, unending assistance. There's no end to it, no limit to it, and you get free trading workshops to help improve your skills. And these come at least 2 or 3 times every month, year-round, and allow you to build your trading abilities as you participate in these workshops or watch the videos, and you always get a playback video of every MAX event. We all understand that markets are changing from time to time, and so new ideas can be very important. They really help us to meet the challenges that come as the markets change. And Eusebio has been a huge help in letting us meet these challenges by developing two very important indicators that we have added now to every MAX course. Whatever MAX course you choose, you will have access to these indicators. One is the Enhanced Trade Format Indicator. We commonly just call it the ETF. And then the other, right along with it, we call the Companion, and it's our Bias Price Direction Indicator. And used together, these two they're just dynamite. You'll be amazed and so glad that you found it. So wrap all these things up into a package: the professional training, the correct price action analysis, knowledge about the global context, truly effective indicators, a very supportive trading community, lifetime support, lifetime access to your instructors. All these things combine and give you an excellent opportunity to learn a trading method that will actually make a difference in your life. And we want to show you that so that you can see it for yourself. You don't have to take our word for it. Some of you don't know us very well, and it's hard to just take somebody's word for things. So we're going to let you see it live. You'll get to watch the trades as they are made on real-time charts. You'll get to see the risk management. You'll see the indicators at work, all of these things. And that's coming up on Friday, so I hope you can take advantage of that and attend. But if you can't, we'll make sure that you get the video, and you can get a lot out of that video as well as we trade the non-farm payroll announcement. On real-time charts, you know, you just can't hide anything. It's right there in the open. You can't exaggerate anything because everybody's watching it right there. So I think it's important, and I do hope you will attend or watch the video playback. Thank you again for being here today. We want to answer any questions that you might have, so just ask anytime. You can use the question panel right there in your GoToWebinar, and we will do everything we can to be sure every question is answered before we leave today. And by the way, there is a door prize drawing coming up during our question and answer time, so hang around, and I hope you're a winner. Eusebio is not only the developer of the Enhanced Trade Format, the ETF, and the Companion, he's also a phenomenal MAX trader. He has traded this system full-time for many years now, and I'll let him tell us a little more about his background and his experience, but you can be assured he is the perfect choice to help us understand what MAX trading is all about today. Eusebio, thank you. We appreciate all that you do for MAX members, and thanks for taking time with us today. The microphone is yours.
Thank you very much, Craig, for this introduction. So welcome to everybody in this presentation webinar. And I think it is still time to wish you, every one of you and yours, a very happy, very healthy, and very wealthy New Year 2022. Before starting, I would like to make a video and an audio check. Do you see my screen and do you hear me well? If you would like to type a yes in the question area, I would really appreciate just to know that everything is going fine. Okay, thanks, Nick. Robert, thank you very much. So, so let's start with this presentation. Brad, so thank you very much. So let's start with this presentation. Let me give you a very small background of who I am, as Craig has mentioned. So I am a MAX instructor since 2009 after the inventor, the developer of the MAX trading system, Dr. Jim Pruitt, passed away in 2009, mid-2009. But I am a full-time trader since 2009 also, essentially the end of 2009. But I was not a trader all my life. So I am a past software engineer, having practiced that career for around 35, 38 years. And the last 15 years of my career have been dedicated to the banking industry in a large portion of Europe, which has given me the opportunity to be in acquaintance with some bank traders. And this has been very, very helpful in my trading career. And I have also developed a passion over years for almost 40 years. Stock market, the futures market, the options market, and since 2000, the Forex market. And up to 2009, I have been a part-time trader in parallel with my career in the IT industry. And in 2009, I have decided to become a full-time trader. So this is for who I am. Now, what is the MAX? So, as Craig has mentioned, in fact, in his introduction, the MAX is developed for anyone. Whatever your level of experience in trading or in any financial market, you can learn and practice and apply the MAX trading system. So, you may be an experienced trader looking for consistency, for example, because consistency is really hard to achieve in this difficult activity. You may be a full-time trader wanting to multiply your source of revenue, your source of profits, and so the MAX is certainly for you. You may be also a newbie. When I say newbie, the term newbie has not a negative connotation. A newbie means a new trader just trying to start an activity in trading. And so if you need a reliable trading method, then the MAX is certainly for you. If you are struggling to be profitable, then the MAX will help you greatly to achieve that profitability. The advantage of the MAX is you can work from home or from everywhere you want, especially from home, which is especially advantageous in present situations all around the world, unfortunately. But this is a great point. So if you want to develop your activity from home, so the MAX is good for you. You may want to plan for your retirement, for a better retirement, or simply to get extra income, then the MAX is certainly for you too. And so the MAX has been developed, as I have mentioned a few moments ago, by Dr. James Pruitt, or Jim as we all named him, or Tiger, which was his nickname. And the MAX is in fact the abbreviation for three important concepts. The M of the MAX stands for momentum. Indeed, when we want to open a trade, we want to see enough momentum and volatility in the market, or at least in the instrument we want to trade. The A of the MAX means acceleration. This does not mean we want to see the price accelerating, but we want to accelerate the profits we extract from a trend or from the movement inside a trend we are trading using a scaling technique. And the X of the MAX stands for exit. At some point along a trade, we will have to do some partial exit, and then at some point under specific conditions, we will have to do a final exit to close the remaining of the trade. And so the MAX is essentially a trend following method. The MAX can be tailored for several types of trading styles, but it is essentially a trend following trading, so containing some counter trend technique, breakout technique, continuation technique. So it is associated with a very strict risk management system, which is absolutely essential in order to become profitable with such a trading system. And as Craig has mentioned, it is applicable to any time frame and to any tradable market, provided the volumes are large enough. So, and yes, John, I'm using a PDF. So the document, the screen you see comes from the PDF, so I'm using. And I think this PDF may be available if you request it with Craig. So what I'm going to show in a few moments is how the MAX is working on some chart example. And I will show you that with some recent trade. But before that, and just to thank you for your presence today, I would like to show you or to explain three tips we use in the MAX, which are important tips in our MAX methodology, which may help you to improve greatly your trading activity. And so these 3 tips concern how to recognize a divergence or how to exploit a divergence, how to exploit a long bar, and how to exploit or how to practice risk reduction along a trade. And so I will illustrate that with some charts. So this is an example of a downtrend in a pair. By the way, it was the Euro CAD. The name of the pair is not important at this point. And one first tips we use in the MAX in terms of technical analysis approach and in terms of exit technique, because an exit technique is essential either to bank some profit or to reduce some risk. So one of the exit technique we have is a divergence. A divergence between the price behavior and the behavior of a momentum oscillator. In the MAX, we use several momentum oscillator, and one of them is the stochastic of the RSI. So RSI in abbreviation. And many of you know what a divergence is. A basic form of divergence is when, in a downtrend, for example, the price is making 2 successive lower lows, and at the same time, the oscillator is making 2 higher lows. So the 2 charts, the price of the pair and the value of the indicator are moving in the opposite direction. Lower lows in the price, higher lows in the technical indicator. Let's say, let's call it the stochastic of the RSI or the STO RSI. This is what we call a divergence, and when this divergence is observed, we may define that divergence as an exit setup. And when we want to make an exit setup, we are not forced to close the entire trade. We can close a trade partially. For example, we can close 1/2 of the trade, we can close 1/3 of the size of the trade and keep the rest of the position in order to see if the trend will continue to unfold. Later in this trend, we can see that indeed the trend has resumed to the downside, and again the price make again 2 lower lows while the indicator is making 2 higher lows. So we have another exit setup, and we can take another partial exit, and so on along the trade. Now what I have illustrated here, and you can use immediately in any trading style you may use, is a basic form of divergence. And in the MAX courses we teach several types of divergences. We teach 4 types of divergences because there are a lot of nuances in this type of exit technique. And a divergence may help to bank some profit when the price has moved in your favor, or to reduce the risk in the position in the case the price moves against you, because this may always happen. At some point the price may move against you and sometimes lead to a losing trade. So, but most of the time a divergence will appear when the price has already moved in our favor by definition of the divergence, because the divergence needs to show 2 lower lows in the price in a downtrend, or 2 higher highs in an uptrend in the price, and 2 lower highs in the indicator. So, and I think this is what I'm showing in the next slide. Indeed, we have an uptrend, and we can see that at some point the price is making 2 successive higher highs, while in the STO RSI, the indicator is making 2 lower highs. So we have a basic divergence which can be used for a partial exit of the trade. And later on, if we have another divergence with again 2 higher highs in the price and 2 corresponding lower highs in the STO RSI, we can make another partial exit, banking another nice profit, and we continue as long as we have an open position until we make a final or full exit. So, and so banking a profit will greatly contribute to reduce the risk we have on a position. And so these exit techniques based on divergences must always be considered in any trading system. But there is another way to control the risk when we have a trade is, first of all, how to place an initial stop loss. We consider that whenever we take a trade, we have to, in order to control the risk, we have to place a stop loss. And of course, there are many techniques to define the place of stop loss. In the MAX, we have a special technique for that, but then along the trade, when the price moves in our favor, we can always adjust the stop loss at a better position in order to reduce the risk we have on the remaining position. And at some point, if you consider here, for example, the first partial exit, the first partial exit catches a profit of 49 pips. And let's suppose, for example, that we close 1/3 of the position. So 1/3 of 49 pips correspond to approximately 17 pips. This means that the risk on the position, if we do not adjust the stop loss, is reduced by 17 pips, leaving a remaining risk of 11 pips. But then if we adjust the stop loss, and you can see this horizontal white line represent, a different line represent the stop loss adjustment, the successive stop loss adjustment, and you can see that with the first stop loss adjustment, the remaining position is almost break even. This means that with this partial profit and this stop loss adjustment, the remaining position is risk-free. And when a position becomes risk-free, then you can focus on the way to optimize the profit you can extract from the remaining of the position along the trend. You can make scale-ins, you can try to stay longer in the movement. So there are a lot of possibilities. And so this stop loss adjustment is also a very, very important mechanism in any trading system. But of course, the problem with the stop loss adjustment, and this is an error made by many traders, is to tighten the stop loss too close to the price in such a way that if for some reason there is an increase in the volatility in the price, and if because of that volatility the price moves too far away against your trade, if your stop loss is too small, then the chances are high that the price will hit your stop loss and you will be exited or stopped out too early. So there are rules in the MAX which tell us how to adjust the stop loss in order to stay far away from that possibility of a higher volatility which can go against the trade. The third technique, which is also a very, very convenient technique in any trading system, is when we have a long bar in favor of the trade. And the definition of a long bar, LB in abbreviation, is very simple. A long bar is a bar or a candlestick having a length, and the length is always measured from the lowest low to the highest high of the candle, so from the low to the high, so we take the entire length of the candle, and this length must be compared to the average length of the previous candles. In the MAX, we have a precise rules to define which candles we have to take into account to compare the length of the potential long bar. But you may understand, because most of the time a long bar can be eyeballed. So the length of the long bar must be 2 times or more larger than the average length of the previous candles. In such a case, for example, if the average length of the previous candles is 10 pips and the long bar or the potential long bar has a length of, let's say, 30 pips, obviously its length is more than 2 times the length of the average candle. And so we have a long bar, and a long bar is always a nice opportunity to bank some profit because the price has moved a lot in your favor. And in this case, if the price retraces, we have a nice opportunity to bank some profit due to this nice long bar. And in order to take that profit, we have to define an exit level. And if the price retraces and hit that level, then we make, for example, a partial exit, 1/2, 1/3 of the size of the position. It's up to the trader to define which portion of the trade can be closed. And the exit level can be defined as a portion of the length of the long bar. It can be 1/4, 1/3, 1/2 of the length of the long bar. And again, this depends on the choice of the trader. So And this is a very important rule because many professional traders explain that a long bar is always an indication of an important momentum which will indicate a continuation of the movement in the direction of the long bar. This is true in the stock market, but it is not necessarily true in the Forex market. And what we observe in the Forex market is 2 times out of 3, a long bar will be followed by a pullback and sometimes a deep pullback. Sometimes, of course, the price will continue the movement in the direction of the long bar, but 2 out of 3 times a pullback and sometimes a deep pullback, sometimes also a trend reversal will happen after a long bar. And this is why a long bar, if the price retraces, is always a nice opportunity to bank some profit. Of course, once we have defined an exit level after a long bar, if the price does not retrace and hit that exit level, we simply stay in the trade without having made our exit. But at least the opportunity was there. And if we simply continue to adjust the stop loss, then we will increase the profit we will lock thanks to that long bar. And so the long bars, the divergence between the price and an oscillator, a momentum oscillator, and the stop loss adjustment will be 3 tips I really advise you to consider integrating in your trading process you are using for the moment, and you will see your result improving greatly. So these 3 tips were explained to you today just to thank you for your presence today. Now let me explain what the MAX is, the MAX trading system. In fact, the MAX trading system is based on 5 essential pillars. The first pillar is, of course, the MAX trading system is a trading strategy based essentially on technical analysis, which help us to time our entries and exit. But having a trading strategy based on technical analysis is far away not enough to become consistently profitable in trading. We have to associate also a very strict trade risk management and money management. Trade risk management. The trade risk management is the way to handle a trade. It is often said, for example, that we have to fix a predefined risk-reward ratio, so a profit target, and we fix a stop loss, of course, and if the price hits that, so it is a set and forget approach. But with the MAX, we do not do that. We try to exploit a trend as much as possible. And so we integrate entry techniques, we integrate exit techniques like the 2 exit techniques I have just shown you a moment ago, and a stop loss adjustment to control the risk we have on the trade until the trade becomes risk-free, and then we can focus on optimizing the profit we extract from the trade. And then it is also important to have a strict money management approach. It is often said that we should never risk more than 2% on each trade if we want to survive for the next day in the case of bad market conditions. But sometimes, and especially when we use a scaling technique, a scaling approach, even 2% for each trade is an important risk. And so in the MAX, we teach you how to tailor exactly the risk you can take per trade in the money management approach. So we provide with the MAX trading system. We have also to take into account the global context. When I say the global context analysis, I mean how can we analyze the driving factors in the market? Because, of course, you may have perhaps understood that the market does not move randomly. When you observe a pair, for example, let's say the pound yen or the pound US dollar, it seems that the price is moving randomly, but it is far from that. You know that there are some elements influencing the market, the news release, the central bank decision, the geopoliticals. We can see that, for example, with the Brexit, we have had some kind of volatility, nice movement ups and downs with the pound pair. With the COVID for 2 years now, we have seen some kind of volatility, not necessarily big trend, but some kind of volatility in many currencies, depending on the evolution of the epidemic on each of these countries. And so these elements of the global context all influence the price of any tradable instrument. The intermarket relationship is also an important aspect to consider. And so when we understand the global context, we know in which direction we can most profitably trade a specific instrument, a pair, a stock, a futures contract, for example, a commodity, a futures contract. The mindset is also important. The psychology of trading is extremely important. Indeed, many traders are facing a lot of fears when trading, fears of missing opportunity, fear of losing trades, fear of being successful or too much successful to disexist to. And so with the rules we have in the MAX and the kind of practice we provide, the kind of coaching we provide, so this helps to solve, in fact, all the psychological problem a trader may have. Everything works together, in fact. And there is also an aspect we have to consider, it's the organization. How must we organize ourselves in order to have an efficient trading process? This is especially true for those who want to become a full-time trader. And so in the courses we provide, we have several levels of the MAX. We consider all these 5 pillars, but in the 2 levels we provide today, we will focus essentially on the trading strategy, the trade risk and money management, and the global context analysis. So, and I mean the 2 levels, the MAX Primer and the MAX Standard. So, now let me show you let me illustrate some concept of the MAX through some recent trades. So as we have said previously, so the MAX is a trend following system. And of course for that we need to define what a trend is. And what are the movements inside the trend? This is a pair which was the pound US dollar a few days ago. It was, I think, if I remember correctly, last Monday. And we can say the price was essentially going downwards. So we define, in fact, a trend with our companion indicator. Craig has mentioned it is this green and red line at the bottom of the screen. And when the indicator is green, this defines an uptrend. When the indicator is red, this defines a downtrend. And inside a trend, the ETF lines, what Craig has mentioned as the ETF, but it is the ETF line, these orange and yellow line on the chart associated with the price itself, so define the movement inside a trend. So we have an entire trend in these 2 yellow boxes, and for each of these boxes, with the MAX Primer, each of these boxes represent a trend, but the entire trend was from the top to the bottom of the movement, and you can see the down and ups movement in the ETF line, so showing each movement the price is making inside a trend. And so then once we have defined a trend, we can then define an entry setup. And an entry setup is, in fact, a specific type of patterns the price is doing. We have several price patterns defining several entry setup types. Here I'm illustrating one of them, which is called a safe and perfect mode. By the way, the notation SEN number 1 means short entry number 1. So we have an entry, so which defines a trend, a short trade, a potential short trade. And then once we have identified an entry setup, we have to define if that entry setup is a valid one. It is not enough to have a price pattern, but there are another set of conditions to be fulfilled. And once all the conditions are fulfilled, or enough of them are fulfilled, we have a valid entry setup. And if furthermore that entry setup is in agreement with the global context, we have a tool which is called the max advantage bias, which represents the direction based on the global context analysis, which tell us in which direction we have to trade. And for that day, for the pound US dollar, we had to favor short trades. And so we have the global context being in agreement with the trade, so we have a trade. So we open the trade by defining the entry level, defining our stop loss. So we have rules how to place the stop loss, how to define the minimum size of the stop loss. And once we are in a trade, then we will focus on all our exit setup to define where to close partially our trade and then finally closing the remaining position. So we have several types of exit technique. We have exit technique based on the relationship between the price and one or several indicators on the main chart, or between the relationship between the price and an indicator like the store RSI, for example, at the bottom of the chart. Then we have exit techniques based on the pure price action. We have exit technique based on critical time period along the day. You can see we have vertical orange lines. Sometimes we have vertical red line representing special moments in the day. A vertical red line, there were no news that day. Red vertical line represent a news release. These orange line represent sessions opens or closed. We have the Frankfurt Open, the London Open, for example, here we have the the US Open or New York Open, the Wall Street Open, the Frankfurt close, the London close. Later we have the US close, of course. So we have several types of exit setup. We have, among all these exit setup, short-term exit setup, which call for a partial close, and we have also long-term exit setup, which call for a final close, whatever the remaining size of the position we are handling. With the Max Primer, which is our introductory course, we have a very simple rule. We have one entry, possibly one partial exit, and then one final exit. So we have a first trade here. Whenever we open a trade, so we consider the trade is made of 2 units in such a way that when we have to make a partial exit, we close 1 unit or 1/2 of the trade. And then when we have to make the final exit, we close the second unit or the second half position. In this first example, the first unit has made a profit of 37 pips, the second unit a profit of 50 pips, so in total we have an 87 pips profit, but with a stop loss of 15 pips, this represents a reward to risk ratio of 2.9 R, R representing the risk. The risk can be explained as, for example, 2.9 to 1, or if the risk is 1%, the result will be 2.9% profit. If the risk is 2%, the profit will be 5.8% profit. So the definition of the risk depends on each trader on the risk taken on the trade. Later on, because the trend was not over yet, the trend was still oriented to the downside, technically speaking, and because we had to trade short, we had later another short entry setup, and so we'll repeat the process. We open a short trade, we make a partial exit, and then the final exit. The second trade was also a profitable trade, a smaller trade, but still a decent 0.83 R. So in total, that day, during the European session and the half part of the US session, there was 2 available trades on the pound to US dollar, giving a total profit of 112 pips or a reward to risk ratio of 3.73 R or to 1. So R being the Van Tarp notation. Now, this downtrend was handled with true trade through the Max Primer methodology, but we can use a higher level of the Max, which is the Max Standard, including the scaling process. And the same downtrend with the scaling process gives another completely different profit. And let's observe that trade. Now we have only one trade representing by this large yellow rectangle, and along the trend we had an initial short entry setup, which was identical than in the previous example with the Max Primer. It is the same movement on the pound to US dollar. We have the same partial exit, so we have closed 1 unit of the first entry setup, and then we had an opportunity later when the trend resumed to make a scaling. So an entry number 2. We have very strict rules to make scale-ins in order to control the risk. Because, of course, when we make scale-ins, usually, if we don't pay attention, the new position will be larger, but the risk also increases. And what is important is not necessarily to increase the position we are trading, but to control the risk on the resulting position. And so we have strict rules how to make the scaling. And sometimes we will have to skip a scaling. So after the entry number 2, so a scaling, later on we had another partial exit, closing the second unit of the first entry, and then another scaling, and then a partial exit, closing one unit of the entry number 2, and then another scaling, and then a partial exit. And then you see here a long bar giving another partial exit. And then after some important retracement, but not invalidating the trend, there was an attempt for a trend reversal which has failed. The trend has resumed, and then during that resumption of the trend, we had an opportunity to make another partial exit, closing the second unit of our entry number 3, and then the final exit when we have had a trend reversal, but also timing consideration, because we were at the London close, for example. So we have closed here with our final exit. We have closed the 2 units of the entry number 4. And so in total, we have made 1, 2, 3, 4 entries, 6 partial exit, and a final exit with the 2 remaining units, making a total profit in pips of 279 pips. Let's compare that with the number of pips with the max primer, 112, but the reward to risk ratio was 9.3R instead of 3.73R with the max primer. So we have multiplied the profit by more than 2, almost 3. And this is, in fact, what the max is and what the scaling technique provides in terms of result. So at what point are you break-even? Or it's really easy to define, Gary. See, we have placed the stop loss here at that position at a distance of 15 pips, for example. When we have made the scaling number 2 here, of course, the risk has been increased for the remaining position, but the stop loss has been adjusted. And in fact, we have been break-even a little after the scaling number 2, when the stop loss was adjusted around this area. And from that point until the end of the trade has never been again in a possible losing situation. So, okay? And so with the max, we achieve rather quickly the break-even or risk-free situation. So, and of course, I can illustrate that process for many examples. So I will go quickly here. This is another example a few weeks ago with the Euro Kiwi, again in a downtrend, following the global context analysis. So downtrend, to trade, you can see the result, 2.8 to 1 reward to risk ratio, and with the standard level using the scaling technique, so a nice 12.4 to 1 reward to risk ratio. So a profit which was more than 4 times larger than the profit with the max primer. And so we can trade also the indices. This is, for example, the Dow Jones in an uptrend, and use the kind of result with the max primer, and the same trend with the max standard with the scaling technique, for which it was possible to take the trade way earlier. And so in this case, a nice trade with 6 entries, so the initial entry and 5 scalings, 11 partial exit, and the final exit. You see a nice 8.86 to 1 reward to risk ratio. So a very important, nice trade. And so this is an example with gold. And so the structure of the trade are exactly the same, whatever the instrument you consider to trade. So this was the gold with the max primer long this time, and with the max standard, for example, you see a profit 3 times larger with almost no additional risk. So And so with the Max provide you with a trading method and concept that work, and along the course we explain why these concepts work. For example, there are some concepts we are using in relationship with the behavior of the big boys in the market, and I explain in the course how the big boys are behaving and why the concept we are using consequently are working. And so with the Max, you will get the training and the support to reinforce your trading skills and your money management. This is, as you remember, as I have explained previously, a very important aspect in the trading process. And so with the Max, you will get confidence in your skill. Why? Because in fact, it is extremely important in terms of mindset to develop several types of, or several levels of confidence. First of all, confidence in the market itself, in its ability to provide every day nice opportunities to exploit, more opportunity than you will be able to ever exploit. Confidence in the Max, in the ability of the Max to catch these opportunities, or almost all of them, and confidence in yourself, in your ability to apply the Max. And so for that, we provide mentoring. We can mentor even on a one-to-one basis, the students. We mentor also them through free workshop every week. Chris will talk a little more about that. We call that our scrolling parties. And through homework. After every training session, we assign a homework to our students, and they are invited to send their homework in order to have them to be graded, to pinpoint where they are making good decisions or when they are wrong in applying the Max, because it is important to know how the rules must be applied and to pinpoint when the rules are not correctly applied. And so what we provide you today is two courses, the Max Primer course, which is the very basic introductory level of the Max, and then the Max Standard course, which is our flagship training with all the exit and entry setups, all the trade risk and money management approach, a good level of explanation of the global context analysis, and most importantly, the scaling technique, which multiply the profit we can extract from the same trend. In order to help furthermore our students, because the global context is a subject which is rather difficult to master in a short time period. And in order to help them to fasten their learning curve, we provide for free on our website a lot of information. For example, on a page which is called the News Watches, and if we have some time later today, I will show you that website, because this information is freely available for everyone. You can put, for example, or enter your name and your email address, and whenever that page will be updated every week, you will be informed. And so we provide a lot of elements, for example, geopolitical elements, which can at some point influence the market, but we also provide what we call the News Watch list, which is a simplified calendar which contains only the news release which usually have an impact in the market. Every day there are lots of news releases, but many of them have no impact in the market. And so if they have no impact in the market, it is a waste of time to follow them. So we provide only the news which are really important with some degree of description. So then we provide also, remember the Max is a trend following system, we provide every week an updated list of the best trending pairs. We call that the top pair, the top 10 pair, because usually we provide 10 pairs, the 10 best trending pairs. And then when we associate these pairs with the calendar, we can, for each day of the coming week, we can consider a small set of pairs to consider, to monitor, and then to trade, in such a way that we are not forced to monitor many pairs. Generally, it will be between 6 and 7 or 8 pairs. In order to go one step further, But this is not a free information. This is for information is available through monthly subscription. We provide also the result of my global context analysis. And for a certain number of pairs, some stock indices, commodities, gold and crude oil, and the bonds market, I provide the result of my global context analysis in terms of direction to favor in the trade of the corresponding instrument. For example, on that day, it was a late example. For example, the pound US dollar had to be traded long. The pound Aussie had to be trading short. The stock market to be trading long, gold or crude oil long, and so on and so on. This is for day trading, but the same information for long-term trading in higher time frame, because there are traders who like to trade because they prefer higher time frame or because they have some time constraint. But if they trade the higher time frame, H4, daily, weekly, so we provide also a similar long-term directional bias to trade. And for that long-term bias, I provide the direction for the 28 pairs, 6 stock market or indices. We have recently included the Nikkei 225, always gold, crude oil, and so the US bonds market, the European bonds market, and also the VIX, which is the volatility index on the S&P 500. So this is especially useful for the short term and the long term in order to have a quick idea of the intermarket relationship, so which helps to understand the market sentiment. So just to give you an idea of what kind of result you can achieve with the MAX, especially in the 5-minute time frame, which is my preferred time frame. So we have a winning rate which is around 70 to 75% if we do not use the max advantage bias. So if we do not use the global context analysis. But if we use the global context analysis, so the max advantage bias, the winning rate climbs between 90 and 95%, which is extremely important. So. And this is true for the max primer and for the max standard. Both have the same winning rate. Now, in terms of trades opportunities, with the max primer, we get approximately between 3 and 5 trades per day and per pair. And within these trades, so the profit will be generally between half to 1 to 1 to 1. So between half hour and 1 hour of profit. And a losing trade, because we have losing trade, you can observe that we don't have a 100% success rate. But when we get a losing trade, the loss generally is between -0.2 and -0.6 R, which is very small, so in comparison to the winning trade. And you can quickly see that if you calculate, if you estimate the expectancy of the max primer, it is positive. With the max standard, we get less trade because we exploit larger movements, so with the scaling technique, but we still get between, depending on the market condition, we still get between 1 and 3 trades per day and per pair. 1 to 2 depending on the market conditions. For the moment, it is between 1 and 2 because we don't get extremely large movement like we were used to see several years ago. But this will come back with the volatility increasing and the economy recovering in some countries. But the results are completely different. The winning trade, for example, has a profit between 2 and 5 R as the reward to risk ratio. And the losing trade is the same order of magnitude as with the max primer. So a little larger sometimes due to the scaling technique, so between -0.2 and -1 to 1 for the reward to risk ratio. And again, if you estimate the expectancy, you will see that it is extremely positive. So this is what the max is. If you have any questions, of course, feel free to put them in the question area. And now I pass the mic to my friend Chris, who has some other very important information to provide you with. Chris, the mic is yours.
Thanks, Eusebio. And can you hear me okay? Let's check.
Yes, perfect.
Cool, thank you. Hi, everybody. It's a change in accent time. I'm Next slide, please, Eusebio. Thanks. I'm Chris. I'm based in New Zealand, and as you can see, this is the 77th set of our Max courses, and like Craig said, we've done over 2,000, trained over 2,000 people so far. Next slide, please, Eusebio. Thanks. So just to recap what Eusebio's been through, he's given you 3 trading tips so far, one on the long bars, one on divergence, and one on how to reduce your risk when you're trading. These are really important and would pay to go back through the video to just check up on them if you haven't picked up on them already. He showed you example charts with some of the results being 3 to one of the charts was 9 times more than what a simple buy and sell or buy and hold system can do by using the max standard scaling in techniques with its profit boosting capability. And it works on any time frames and can use any instrument to do that as well. So futures, metals, oil, etc., and is really helpful for options too. The other thing that we do, it was the last part that he was showing you, was we also supply a whole pile of free information for traders. So even if you don't take a course, you can still use our Newswatch page at no cost, and we can update you with whenever it gets updated. This is just once a week, telling you what pairs are the best ones to go for, when are the best times to avoid and to anticipate, and there's 2 or 3 of them coming up this week, anticipating ones, and what the best price levels are for 4 pairs for free. He also has a subscription service for something like 25 to 35 different instruments, depending on what you want to actually trade. So, and he would tell you, hey, prices like to go this far, and shows support and resistance or liquidity levels at those points. So what I'm going to go through, getting there, is just rip through the course features and benefits, show you the pricing, and then we'll do the prize giveaway. And if you have any questions after all that, you're most welcome to ask. And if you have any questions right now, please ask. But I'd just like to point out what we were talking about on the charts, in case you hadn't actually figured it out. Eusebio talks a lot about the R value. One of the charts had 9.3 R, I think it was, I saw. If you use that as a multiplier, so if you're betting, putting 1 lot down or $100 down, then the result, the R value, tells you how much you would have made out of that particular trade. So we tend to use the R value instead of pips most of the time because nobody knows how big your pips are. You could be trading 1 cent or $1,000, doesn't really matter. And the R value just sort of normalizes everything. So if on that one chart there was a 9R return, then if you traded at $100 on it, you would come out of it with $900. So much more than the primer course itself can do. So next slide, please, Eusebio. Thanks. So we all know why you're here. You want to trade for a living, you need financial security, income, etc., retirement, looking after your family, all that sort of good stuff. It's being able to do this from your home once you learn how is really, really, really helpful. It takes a lot of the stress out of things. Next slide, please, Eusebio. It's this long distance stuff to Belgium or to France is kind of slow at times, but still. So the question is, how are you going to become a trader? And you may already have your own trading system going. So the thing is, you have to find a system that's not weak, that's got personal training and interacts with you. So what we supply is a supervised course, supervision. We ask you to do homework, and I'm really big on the homework side of things, generally because I do the feedback on it and go through everybody's charts bar by bar. We want to make sure that you become as good as you can with this. You don't have to be a virtuoso at trading. you can, so long as you're making money from this, that's really great. So you need to be consistent with this, with consistent results. And in order to get that, we are very risk averse with our trading. We end up with huge profits, but that's only because we avoid going off the rails. Next slide, please, Eusebio. So the problem with trading, a lot of people find, is that price action is quite small, especially these days. When we first started out, something like the pound yen would move 600 to plus pips per day. These days we're lucky if it moves up to 100 pips in a day. Trying to figure out what direction you need to place your orders is another big issue. And if you've got your own system running, that may be a bit fluffy of where you're supposed to enter and exit and how much you have to risk. And should you get into this, or should you close out right now because prices pulled back against you? And on the other side of things, some of the more simple systems have just got basic charts. Again, not telling you what direction to go in, but also being kind of fluffy again about when you're supposed to do the actual entry points. And once you're in a trade and it starts pulling back, or it looks like it's beginning to peter out, is this the place where I should be getting out, or should I hang in there for a bit more profit? And next slide, please, Eusebio. And the Max can help with all of this sort of stuff. What we've got is a system that adapts to the price action. So you'll be able to tell within 1 or 2 pips if you're in a trend, when you're in a breakout situation, if there's chop or a counter trend. So we have specific setups for each one of those, or no setups in some of the cases because they're too dangerous to get into. We can find trades, thanks to Eusebio, in more movements these days because of his ETF indicator. It runs in both directions. It doesn't really matter what the chart sort of looks like. His indicators will give you an idea on which direction you should be trading in. It's very nimble because price changes really rapidly, like within a couple of minutes at times. So we use price action for that side of things. And we've got, with Eusebio's extra indicators at the bottom of the charts, excellent direction positioning. So beforehand you can get an idea on what direction you should be moving in. And when you're in the trade, it can say, hey, this is kind of petering out here, now's the time to get out. And we've got other indications or criteria to tell you when to get out as well. When Jim was around, he made this really amazing little development. I don't know how he did it. He just ripped through stuff. Like in one night he would test out a whole pile of things and come up with these amazing ideas. But he has a dynamic, where he produced a dynamic support and resistance indicator, which can give you an idea on how far price has moved, if it's already moved too far, where it's likely to move to, and if it comes back, where it's likely to go to as well. It's like driving with headlights on, and if we're trading, it's one of the only indicators that we kind of want when we're actually trading, if you have to minimize the number of indicators that you're using. That's only available in the standard though, not in the primer. It's a magic indicator. And the other thing that Max does, as I mentioned, is we absolutely do our utmost to minimize your risk, both the profit that you're making as well as on your account. So that's the money in the trade risk management. So when we're scaling in, as we're adding to the orders, it's kind of counterintuitive, but the way we do it, the more that you scale in, the less risk that you end up with. And we were asked before, when does this become break even? It can become, in some of our trades, that you very quickly, especially with the standard and the scale-ins, you move into a break-even situation where there's absolutely no risk, and then you move into a guaranteed profit situation. So even if your machine blows up and a tsunami hits or something, sorry, it's top of the mind here in New Zealand, even if you lose contact with your broker and everything comes tumbling down on the trade, you are still guaranteed a profit with this. It's one of the Max advantages. So next slide, please, Eusebio. Okay, so the benefits of our training, when Eusebio is showing this, he'll show you And we use 5-minute charts because they generally tend to be the have the most movement for the day, and you can sort of milk them as much as possible. Really precise and detailed setups he'll be showing you. So on the M5, you'll be getting into a trade. You find the setup bar, and then within half a pip of the open, or 3 pips, depending on the time of the day and the movements, you'll be getting into that trade. So it's very precise that way. Similarly for exits. Well, once you find the setup bar within half a pip to 3 pips, you'll be out of the trade. It's the criteria. We have hard stops, and we also have trailing stops, or mental stops if you want to call them that, so that you manage your risk. And they just trail along protecting your profit. And the hard stops protect your account and your profit in case the machine turns off. We also have the homework that I mentioned. This is to speed up your learning and to deepen it as well, rather than just keeping things fluffy in your head, like, oh yeah, I know all about that, blah, blah, blah. But it becomes totally different when you're in front of a chart. You've placed an order and suddenly you need to do something. If you've done your homework properly, you'll be in a better position to recognize what's going on in the chart and to take action. And when you do the homework, Eusebio will run through the course and say, here's a setup, here's another setup, here's a setup, these are exits, and we just want you to show us a chart with an example of the setup and whatever exits follow after that. So we go through it slowly for you, so that you can pick up on this sort of stuff. And then when I see the charts, I go through them bar by bar and analyze each one and report back to you if you've done well or missed stuff, or hey, look out for this because here's a hot tip. There's when you see this particular situation, it can be counter entry type of thing, potential divergence or something like that. So the homework isn't just for correcting you, it's for encouraging you, and it's also used for tips and suggestions when you're running the course as well. Just on the difference between the two courses, the primer runs for 2 sessions and the standard course runs for 7 or 8 sessions. We have bonus sessions at the end of them. What I noticed, because I've also trained people in the primer as well as the standard, is that the primer people are a bit slower at picking up things because they're not immersed as much as the standard people. The standard people are in the course basically for 2 months. The primer people are there for just under a month. And so because you don't have that immersion and sort of push to do the homework, things don't quite gel as quickly. And so it's more up to you to do the work on that side of things. So it's easier for the standard people to pick up on stuff. Okay, I've been asked how my cat helps with homework marking. He just gets in the road. Okay, as well as the homework, we have regular practice sessions each week. Because right now is when we'd be having one of these practice sessions. We call them scrolling parties. We'll be running it tomorrow for any Maxes listening to this. And so you should have received the invite by now. Let me know if you haven't. But there are no costs for those. They run for, say, between 2 and 4 hours, depending on the time and the number of questions that come up. You can say, hey, I had trouble with this chart. Can you run through this chart at this particular time? What's a good broker? Like any question relating to trading is fair game here. And Eusebio has a huge amount of knowledge that he can help you with. So they're really, really worthwhile. And we've also got all the videos on the back, so you can go back through them and just pull out tips, as one of our students has just done. And we try and support you as much as possible, so that whatever you ask for, we'll supply. So this is guaranteed for life as long as we're alive. And I really like Brian's quote there. He says, I hate homework, but I've come to realize I have a tendency to grade myself on a large curve. Objective feedback is awesome. Yeah, so being a Kiwi, I don't really understand what the large curve means. It's not part of our vernacular, but I guess he means he's grading himself with a wide margin of error. Whereas when I give the feedback, it's either correct or it's not correct. Sometimes I'm wrong, which is okay. And if somebody picks me up on that, that's great. Somebody generally does. But yeah, the objective feedback is really cool. You just get told, yes, that was really good, or this was incorrect, this is how you should have done it. And the setup started 4 bars ago or something like that. Next slide, please, Eusebio. Thanks. Okay, so what you're going to get out of our courses, the full system, there's nothing extra to purchase. So you get all the indicators, templates, examples, videos. You get all the training from a pro, Eusebio, one-on-one guidance via the homework if you want to do it. It's not compulsory, but we really, really do want you to do it. You have lifetime access to all the course materials and support. We're still being asked by people from back in the early 2000s, well, late 2000s, for course materials and the indicators, and hey, I lost my videos, my house burned down or something like that. So we've still got those, we can still help. And like we said, we can even help you whenever you want, whenever you ask, several years later. And we do occasional live sessions, like this Friday in the non-farm payroll. Eusebio, as Craig said, will be running through the non-farm payroll session live, so you can actually see how trades unfold. And also, we don't just have the primer and the standard course, we also have more advanced courses afterwards, but that's not the purpose of this. But you're not just, you don't just stand there. And if you want to repeat the course, there's massive discounts for repetition, and if you repeat them 3 or 4 times, then there's no charge for any further sitting in on the courses. So these days we've got quite a following on some of our courses for people that just want to hang in there. The market is always changing. We're always adding extra tweaks to the courses, and people just come along for the extra information, for the companionship, that's a lot of it, to keep their heads straight so that they don't sort of stray off the chosen path of the max. Yeah, okay, I'll leave that. And then we've got the news watch page for the best pairs to trade, which news to avoid, which news to look out for, and a few price levels if you want to subscribe to that as well. They're free, there's no charge for them, but there's only 4 of them. And in the course we use MetaTrader platform. There's no charge for it, most brokers use it. We use it from one particular broker. We don't recommend any brokers, and we use it from this one broker because he has good, well, they have good weekend candles, and it keeps everybody using the same charts, because if you have different brokers, even on a 5-minute chart, the candles will be different. So if you're trying to compare charts from your homework to somebody else's or what Eusebio has done, it can be difficult if you're not using the same broker. So we just ask you to use one particular broker. If you want to move to somebody else, like NinjaTrader, we've got some indicators for that, or multi-charts or TradeStation or something like that. Quite happy to give you the source code so that you can port them over to those other platforms yourself. Next slide, please, Eusebio. No charge at that either. Thanks. So what we want you to get as a result of this is the max has got a win-loss rate of around about 70%, like Eusebio said. The average drawdown, which means if you had a series of losers, will only be about half of what you risk. And I forgot to put the average profit in there. So the average profit for the standard is around about 3 times what you've actually risked. So if you're risking $100, you have a series of losers, you'll probably lose about $50 on each one, on average. Some will be a bit more, a bit less, but around that. The average profit will be about between 2 and 5 times if you rip back to that slide. So for the standard, you're looking at, say, something like 3 times what you actually risk. So if you risk $100, you come out with $300 per trade on average. And because the win ratio is so high, then just completely swamps the drawdown, what you lose, and you end up with winning trades, trade after trade. And just by the by, Eusebio is, we call him a pro on the trading side of things. I think it's been about 7 years now. I went back through the notes. 7 years now that Eusebio has not had a losing day when he's been trading. Okay. So with the standard course, it's got the profit boosting built into it. So you can make 30% to 300% more profit when you can scale in on a good trend. That means about 40 to 60 pips of a trend over the primer course. The primer course itself is a subset of the standard. So the primer is the first 2 sessions of the standard. So you get a couple of entries, a couple of exits. It's profitable, but there's no profit boosting in it. It's slower than the standard course. The entries aren't quite as perfect as the standard. And like I said, you don't get the boosting power that you do with the standard course. You'll get as much support as you ask for in both courses. And with the standard, you get this really powerful and really safe trading method. Like I said, we really hammer minimizing risk with this. And if you've already got an existing system that trades trends, you could possibly and probably use a lot of the information from the standard course to help boost your existing system. We had one guy come along around about 2010 who was making quite a bit of money each day. And when he learned how to do the profit boosting side of things, he was able to almost double his account every day as a result of his of learning how to do the scale-ins. Okay, but he was a bit of an exception. But what we want for you, the real benefit in the end, is for you to achieve your goals, so that you come out with being able to trade for a living, that you don't have to be wealthy, but at least you're independent and you've got security and you can pay, especially in the States, for your hospital bills. You don't have to lose your house because you get sick. You can look after your grandkids and just have generally a good way of life. Next slide, please, Eusebio. Thanks. Okay, so the 2 courses we've got, as I said, the max standard runs for 7 sessions, the max primer for 2. The standard has got multiple entries. The primer only has a couple of entries and a couple of exits. The max standard is got the profit boosting methodology built into it, so that you make 30% to 300% more on most trades than you would with the primer side of things. The primer is still profitable, like I said, but it's just a buy. You get into a trade and then you get out of the trade. It's got basic risk management. It's still safe and it's still profitable, but it's slow and it comes nowhere near what the max standard can actually produce because of its exceptional trade and risk management. Next slide, please, Eusebio. Thanks. So the standard course starts in about a week and a half on February the 10th. It's a Thursday, and it runs for 7 weeks, and we'll have a bonus session after that, and we'll probably have some extra sessions thrown in the meantime as well. It might be that you get invited to some of the practice sessions on the weekends if it suits you, if it suits the part of the course that you're in. So that normal cost is just under $3,000. We're running a webinar special at $2,399. And like I said, those weekend sessions, there's no charge for those. They just go on. Next slide, please, Eusebio. The primer course also starts on the Thursday. Like I said, it runs concurrently with the standard. The first 2 sessions for the primer and the standard are the same, and then the standard stops. So you don't get as much out of it. The normal price for that is $300, and we've got a webinar special of $159. Yeah, and there could be a bonus session at the end of that as well. Next slide, please, Eusebio. So if you've got any questions, please ask. I've put some extra notes in the chat area if you want to go back through them and check out some of the stuff. But and I've come to realize that we do use a lot of jargon when we go through stuff like RRR and scale-ins and et cetera. If you don't know what they mean, please ask. We're not here to sort of try and bamboozle you. We should be able to explain things to like a 5-year-old and still have them understand it, sort of. But here, those are the webinar discounts, and please feel free to write them into the question area in your little go-to panel off on the side, where it's got probably an orange button or a green button. But we do have a question that came through. It was from Ed, and he said, if I only trade the US session, not the London, would the profit potential be significantly reduced? And Eusebio, can you answer that one?
Yes.
Thank you.
Yes, sure. Let me show you my one trading platform, for example, here. If you take a pair, for example, like, let's say, the pound yen, okay? And you can see here during the US session starts in this area, approximately. And inside this US session, we have to divide that US session into two parts. The first part of the US session and the second part of the US session. The first part overlap with the European session. And in fact, for some pairs, it's convenient to trade the entire US session, but for some other, the second half part of the US session is not worthwhile to be traded. And so you need to know for each pair when it is convenient or not to trade the US session or which portion of the US session. If we take, for example, let's take the pound Aussie, you can see that during the second part of the US session here, the pound Aussie has made strictly nothing. So it is important to know when a pair can be traded. And in the course, we explained that, of course. Now, there are some pairs which can be traded during the entire US session. Let's take, for example, the pound US dollar. And we can see that even during the second half of the US session, we may have some interesting movement to trade. And so there are simple criteria to understand and to apply to know when to trade or not. This is the first part of my answer. There is a second part of my answer. Usually during the US session, if there are no important news releases influencing the price, we will have a smaller movement. But with the max and with another level of the max I have not spoken here, and neither Chris, we call the max sum, even a small movement like this one, which is a movement of around 25 pips, so which is a rather small movement, even this kind of movement with the max sum can be traded profitably. And so this depends on the level of the max we are using. So yes, the result will be more or less important depending on your choice of the pairs you trade and depending on the level of the max you will use to trade that pair. Other questions, Chris?
Ah, okay. Sorry, you didn't say full stop. Yeah, not much has actually come in. So if anybody does have a question, please ask. But something that somebody has asked is, I'm still in the phase of exploring trading and yet to get my feet wet. There's so much clutter with mutually contradictory information that it's practically impossible to get the right information with confidence. So naturally, my biggest question is how to get started and then survive. Up to you.
Yeah, this is a very important question, in fact, also, and not so easy to answer. Where can we get correct informations? In fact, it is important to understand that the market does not move randomly, and there are driving factors. And it takes time to understand these driving factors. Let me show you a website. Just a moment, I'm going to open my one of my browser. If you take, for example, an economical calendar like Forex Factory, and you take the news release of next week, for example, we can see that from Monday to the end of the week, there are a lot of news with a color code, but the color code is not necessarily correct. And many of these news are not important at all. And this is why sometimes it is believed by many traders that these informations are not reliable enough. But in fact, when you understand which news really impact the market, they become extremely reliable. For example, on that day, the Thursday, 3rd of February, this should be a good day to trade because we will have the Bank of England meeting. And this is one of the examples of the news which may move the market, not necessarily, but they may move the market. So this is a very, very reliable news release. And when you understand how to appreciate the monetary policy published by the central banks and eventually the commentary made by the central banker, you will know from that moment in which direction to trade essentially the pound pairs. And so in the course we teach you what are the news which are really important. But we provide also other information because the news release are not the only information which will drive the market. On our news watch list, we have, for example, the geopolitical elements. What are the elements around the world which may more or less evolve, which may influence the market, not necessarily for day trading, but on a medium or long-term trading. For example, today, we have a special situation with Ukraine, for example, and I think Ukraine, yes, is mentioned, so here. So we have to pay attention to what is happening around Ukraine in order to see how this can impact essentially the US dollar and the euro currencies. And so there are a lot of them. We provide, as I have said, a simplified calendar in order to focus only on the news which are really, really important, and to make even it easier, so we provide the best trending pairs and what pair to focus on each day of the year. And so these are really reliable information. Now, in order to go deeper into the global context analysis and its understanding, in the course we provide informations where to get additional information to have an idea, especially of the market sentiment. So the market sentiment also is an important driving factor in the market. And all these elements plus the market sentiment is something I include in the global context analysis, and I'm going to show you quickly the information we give in terms of bias.
Cleaned it up, Eusebio.
Yeah, that's not a problem.
Okay.
I have to connect, of course, in Google. Now we have to connect with Google. And so I will use a 90% zoom. And so every day, so I update this page with the different instrument I'm monitoring to define in which direction we have privilegedly to trade these information, either for day trading or for higher time frame trading. And so this helps the trader to get good information and to know in which direction to trade. Of course, it may happen that in my own analysis I'm wrong, but let's suppose that I define a long bias for the pound US dollar and the market instead decide to go downward. This may happen, and there are two reasons. Perhaps there is a market manipulation. This may happen, of course, by the big boys, or I'm wrong in my analysis. But if my bias is long and the price moves down, at least we will have no trade. And so no trade, no pain. But on all the other instruments, when my bias are correct, so we can get a very, very high success rate, 90 to 95%. And so all these information I have just described, so provide reliable information so for our members or non-members, because these informations as well as the news watches is available to everyone. There is no need to be in the Max community to get access to these information. Of course, the difference between the news watch list and the bias is accessible through a small monthly subscription. So because we want all this information to be affordable for everyone. So
before you disappear off that, Eusebio, I think if,
yeah.
Too late?
No, I can redisplay.
Okay, I think if you scroll down, I've left your notes from Thursday on there as well.
Yeah, for example, for Thursday, last Thursday, because Friday usually I don't provide bias. I take the Friday off. I like to rest and to make some other things. For example, I like to learn playing piano, so I practice a lot on the Friday. But for example, just a few minutes after the London Open, I make a small comment For example, the comment was, the market sentiment is oriented risk-off. So this means that the big boys are privileging safer instrument to trade. Stock indices are rather weak, volatility is high, and some safe havens. The safe havens pairs are the yen pair, the Swiss pair, or in terms of currencies, the yen, the Swiss, and even the US dollar are pressured with the risk of sentiment and the hawkish Fed. The previous day we had the Fed meeting, and the Fed has been very hawkish, and the hawkish Fed meeting, the US dollar is strong as the expectations for a rate hike are larger. In contrast, the high beta are the Aussie, the Kiwi, the CAD. And so in this case, like Kiwi, Aussie are weak. Today, some US dollar news, the recent Fed meeting and the prevailing sentiment, sorry for some typo, I need to type fast, and the prevailing sentiment will most probably drive the market, so patience for the right setup and disciplines. And then I may add several notes, for example, when I close my session, or if there are other comments to write. So I read some comments so the members, the subscribers can take profit and to better understand how to trade based on my directional bias. So this is a justification of my bias. And the comment is more or less important depending on each day. So,
Okay.
yes, please.
Yeah, thank you. There's no more questions coming, but I do have just one thing to sort of say, which I've been hammering a bit in the sessions, is that a lot of the times if you tell somebody that you're going to start trading or that you're a trader, the people will say, well, what's IBM going to do, or what's the market going to do, or that sort of stuff. And they think you can predict what's happening. And that's completely against what we here at the Max try and do. We look for best positions, ones that are statistically going to pan out for us, like with a 60 to say 90% win rate, and then we don't know if it's going to work out or not, but then we manage the trade. It's all about risk management. So if it looks like it's going flaky, then we get out. If it looks like it's going to be good for us, we stay in. If it's going to be very good, then we stay in and we add to the trade. We're not trying to predict where it's going. The market will make its own mind up, but we manage the trade. So what we're teaching is all about risk management, trade management, and how to be careful with the actual with your money, essentially.
Yeah. Indeed, let's say, for example, Thursday with the Dow Jones, for example. Sorry, this is the S&P 500. So here we have a nice long trend. Okay, a nice long trend. So here, how many points? It was 8 points. 8 points is a good movement in the S&P 500. And when we take a trade, let's suppose we had an entry set up in this area. We had the stop loss somewhere in this area. Okay, this is a stop loss, for example, of 2.5 pips. We do not fix, for example, a reward to risk ratio of, let's say, 5 points. So in this area, let's fix that level, so here. And we do not fix a target profit because if we close the trade when the price hits that supposed target profit, look what nice additional movement we can miss. And so we have a loss of opportunity in this case. This is the first point, why we do not fix a target profit. The second point is, what if the price does not reach our target profit? The price will make a smaller movement. And so in this case, a usual trader using a target profit will miss the trade, will miss the profit, and it may happen that it will close the trade in an unfavorable position. With the Max, we try to catch the entire movement by staying in the trend as long as the trend is valid. And when the trend resumes, we can catch a second trade, so in all this area, taking whatever the market accepts to give us. So if it is 1 hour, it's 1 hour. If it is 10 hours, it's 10 hours. And this is why we have a very variable result with the Max, but the expectancy, and this is why the expectancy, in fact, is very high. Sometimes the result of one day makes your result for the entire month. And that's the beauty of the max, in fact, when the trend is present, when the trend is unfolding.
Okay.
Yes, please.
Hang on, just a moment. Oh, Craig, can you? I think we've messed up here. We haven't put up the links so that people can actually get into the courses. So I'm going to put the standard one up, blast that out into the chat area. We'll also send the links through into via email out to you as well. So apologies for that. Oh yeah, we've been on holiday for the past couple of months or so. We don't run many of these courses. So when we have a break, we need to be retrained. So I've just put the links for the primer and the standard course in the chat box, and Craig has just dumped them all as well. Craig, I don't think you meant to dump all that into the chat area. Anyway, okay, but we'll send the links through. Sorry, if you're sending them through, let us know that that we had the foul up with the links, and you still want to take advantage of the 1 hour side of things if we haven't got this sorted out by then. So, okay, so I've put the links into the chat. I think in your question area, you've just got a whole pile of junk come up, and yep, and okay, and you'll get it in the email. If you want to take advantage of the 1 hour discount, then we'll honor it if you just let us know that you are you still want to take advantage of the 10% discount that Craig has talked about for the next hour, and we'll honor that even if you come in a bit late. So okay, anything else? No other questions have come in, so thank you very much for your time and your participation in this. And Maxes, we'll see you tomorrow for the practice session. And yeah, stay safe out there, everybody, and trade well. And if you have any questions, please contact us. And if you want to, we've got this our Skype name there as well, Max Trading System. We're available. Okay.
Chris, hold on just a second.
Yep.
My computer's acting up. I want to make one more try for pasting the links in. Won't take long.
Okay. So I'll go back through my notes and find an old question.
I think it worked that time. Hold on.
Okay.
See them?
No, nothing is coming through.
Wow.
Is it in chat or in the?
In chat, yeah.
Okay. Yeah, there's.
I'll try the question area.
Okay. Okay, that came through in the question area. So,
I don't know
sorry,
what's wrong
folks.
with my chat. Never had that happen before.
Oh, special. It's there to make us hairless. Okay.
It looks correct, and then when I hit the send button, it messed. There it went. Okay. I can see it. Can you see it?
Next
in
to
the chat.
In the chat.
Yes. Now, yes. Yes.
Okay. Wow, that was strange. Okay, sorry everybody.
Okay. So if you have any questions, let us know. If you want to, if you missed this, let us know. We'll still honor the discount. But let's wrap it up here rather than keep on dragging this out. Thank you very much for your time, and hope to see you in a course coming up in a week and a half's time. And remember that there's the non-farm payroll session on Friday as well coming up too. Thanks, everybody.
No, yeah, of course, there is no guarantee there will be movement with the non-farm payroll because this sometimes happens. So in order to have a movement with a news release, we need to have a big surprise. And the non-farm payroll is a bit tricky, but it will be an opportunity to illustrate some concept of the max with this non-farm payroll, whatever happens in the news release.
Okay. This time, thanks, everybody. Bye now.
Bye, everyone. Have a great weekend and see you soon. I will keep the room open for just 5 minutes if you want to take some notes. And so in 5 minutes, I will close the room. So bye, everyone.